What's up, guys? In today's video, we're going to be jumping right into it. We're going to go into part 2 of a video called Airbnb Owners Are About to Sell, Massive House Crash Coming. This is by a channel called Reventure. I did a part 1 a little while ago on this channel, and I want to take this time to go ahead and go into a part 2 because it was just a really long video. It's almost a 20-minute video, and so I wasn't able to go through the entire video on the last video. So if you haven't checked that out, check that one out to get started. But for context, he's just talking about how there's going to be this massive crash coming in the real estate market because of short-term rentals, and I kind of debunked why I disagree with that perspective. Now, before we jump right into it, I did want to note that I jumped into this channel a little bit more after filming the last video. And if we open it up here, you can see there's a bit of a theme on the channel. If we look at the recent videos here, you've got danger, people are leaving Texas, time to sell, why the housing market hasn't crashed yet, 2023 recession just hit commercial real estate, landlords dropping their rent, worst cities to buy a house in, crash, drop, sell now, crash, drop, crisis. And we go back 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 and we go back. And he's been saying to sell for basically ever. And so this seems like it's one of those channels where, you know, like I can literally just keep going and you can see like bloodbath. It's a 2022 stock market bloodbath. Wall Street plotting to crash 2022 housing market. 40% fire sale intensities. Like we can go back and keep going back. And this seems to be a person who's just going to keep on predicting a crash and is always screaming wolf. And then when inevitably there is a crash, because we know there eventually will be a crash, they're going to go, I called it. Because of course, if you just spray and say that it's always going to be a crash, eventually you will be right. You know, a broken clock is still right once or twice a day. And so, yeah, just wanted to bring that up before we go into this because obviously this time he's talking about Airbnb, but he's been talking about the crash for like over a year now. Just from my looking, I didn't go too far. I'm sure it's been multiple years, more than likely, that he's going into this. And so, yeah, just wanted to give that bit of context before we jump in here. I'm probably not going to agree with a lot of what gets said, but I haven't watched the rest of the video, so maybe he'll be singing a slightly different tune, and maybe there are going to be parts that I will agree with to some extent. So let's go ahead and jump into it.
But folks, I don't want to be too negative here. I actually think that this is going to be an opportunity for a lot of you guys out there.
And so just for context, in the video so far, if you didn't watch the first one yet, he's talking about the Airbnb crash and how, you know, Airbnb places, people bought properties for way too much and now they're selling them and all this stuff, which parts of it are true, parts of it are just really over exaggerated. And I go into that in more detail in the video, but he's saying that it might actually be an opportunity, which let's hear him out.
Whether you're a home buyer or an investor that's waited and who's been diligent, the Airbnb bust and the overall downturn in the market and the recession getting worse is going to create lots and lots of opportunity for a lot of you who have been waiting for a long time. And I think that opportunity is going to come most in the cities I'm about to show you on this list. These are metros that I've filtered that have the most exposure to Airbnb bust through a variety of different metrics. And I just want to explain very quickly how I came up with this list. Number one, I wanted to look at markets where the Airbnb supply has surged over the last 4 years, where there's been a 50% plus growth rate in Airbnb supply, because that indicates a lot of amateur Airbnb operators went into the market and thus they could be the ones to sell first. Number two, these markets all have a high ratio of Airbnb supply to homes for sale on the market. And the higher this ratio is of Airbnb supply to homes for sale, the more chance that some of those Airbnbs make it onto the for sale housing market and push prices down. And of course, number three, these are...
I mean, that isn't a very good analysis. That's a bit of a guess. But the first piece, like a huge growth, a huge spike in number of Airbnbs in a market, especially like a quick spurt of growth, I would say is a pretty good indication of people just jumping onto the bandwagon, getting in. There probably is a lot of people with like dumb money just jumping into bad deals, but that doesn't mean that they're going to be selling them at numbers that make them good deals. It just means that they're going to be selling them. But if they're selling them and they're trying to get what they put into it out of it, and it was a bad deal for them, it's probably just going to be a bad deal for you as well. And so it's tough to know whether those are actually going to present really good buying opportunities. And I think the one thing I like to highlight is, yes, there is opportunity in the market right now. There's opportunity in the market all the time. right? And so the biggest thing to remember as a real estate investor is it's not about timing the market, it's about time in the market. And so if you are one of those investors he was talking about who has been waiting and holding on and looking for the right opportunity, then you just have a fundamentally flawed principle, like set of principles for your investing. Because the longer that you wait on the sidelines, first off, like who's going to try to drop a catching or to catch a falling knife, right? That's the great analogy for trying to time the market on its way down. You're trying to grab onto a knife as it's dropping, right? No one knows when the bottom's going to be. There are literally people that get paid billions of dollars to manage huge portfolios, and even they, with their huge teams, all their resources, they still don't know how to time the market perfectly. Like 98% or more of all mutual funds fail to beat the market over an extended period of time. So what does that say for you and me and our likelihood of actually being able to time the market, right? Very, very, very slim chance. And even if we do, it's purely based on luck. It's not actually skill that allowed us to time the market. And so trying to time the market is a fool's errand, because the time that you spend on the sidelines waiting for things to hit rock bottom, your money is just dwindling away, especially right now, to inflation, and you're not actually getting a return on that investment. And frankly, if you're investing for cash flow, which is what you should be doing, if you're investing in short-term rentals, you should be focusing on cash flow. That's really the big advantage of short-term rental investing. Then it doesn't really matter what happens short-term in the market. If the price of your property goes up, down, sideways, it's fine, because you're not buying it for the long-term appreciation. Or specifically not for the short-term appreciation. If you're flipping a house, you need it to appreciate short-term, so you care about those fluctuations. But if you're holding onto it for long-term, yeah, over the long term, you're gonna come out ahead. And while you're waiting for that to happen, you're making cash flow. You're making good cash flow all the way along. So if you are one of those people who's waiting for the right opportunity, I would say stop waiting, stop trying to time the market, and just get into the market, because no matter what part of the cycle we're in, there are always good deals, and there are also always bad deals. So it's really more about identifying the right deals and the bad deals than it is trying to time things perfectly.
3, these are all markets where the Airbnb revenues have absolutely collapsed over the last year, leading to lots of operators who are struggling and losing money and thus more likely to sell. And the first city on this list that I want to talk about is actually my hometown in upstate New York. We zoom in here on Hudson, New York. You can see that the Airbnb revenues, also on Vrbo and Booking.com, according to all the rooms, is down 37% year over year. And it's down by nearly 50% from its levels 2 years ago. And Hudson, it's this area, this kind of vacation area that a lot of New Yorkers went to during the pandemic in the Hudson Valley. Well, they pushed up the demand. They bought a lot of Airbnbs. So many Airbnbs that there's now around 900 short-term rentals on the market in Hudson and Columbia County, compared to only 220 homes for sale. So there's 4 times as many Airbnbs as there are homes for sale. And another area that's getting hit.
I just don't get the real link there between number of Airbnbs and number of homes for sale. Like I get what he's trying to say is the link there, but it just doesn't really exist. Those two things aren't really intrinsically linked or causal of one another. So yeah, I don't really agree with the whole point there. That being said, a market like upstate New York, I could see with a huge amount of growth that there is there's a lot of people just opportunistically buying up there. That being said, I want to point out that a drop of 37% in RevPAR, that's revenue per available room night, is not the same as a 37% drop in bookings. So I just want to make that really clear. What's actually happening is that you take revenue, right, and you divide it by the available room nights. And so if revenue, let's say the whole market of Hudson generates $1 million in a given month. Well, that would be per available room night at 100 listings, right, in the market. You take $1 million, you divide by 100, and you'd go, okay, cool, that's my revenue per available room. And if revenue stays the exact same, but you're now doubling the number of room nights, or in this case, 4xing the number of room nights, because there's 4 times as many properties. And now you have 400 properties, $1 million divided by 400, you're now getting a much lower RevPAR, right? But the total revenue, the total amount of bookings in that market stayed the exact same. It may have actually even grown, right, more people might be booking in there, but it's just not pacing with the amount of available room nights. And so what a lot of people think is that that means that your revenue is going to drop as an individual host. What actually happens is that a whole big chunk, like, 200 of those 400 or 300 of those 400 properties, they don't really get booked, but 100 of them still do. And maybe even if there's growth, 150 or 200 of them do get booked. And so the way it plays out most of the time is that the top properties eat all of the returns, right? And so that's why it's super important to not only buy the right property, but also to really know your way around performance on Airbnb. And I think that's something a lot of people underestimate what it's going to take, because you need to be able to beat out the competition. And it's not an even distribution of the demand amongst all of the supply. It's really like the top 20% of the supply gets pretty well all of the bookings in a situation like this, because they're more beautiful listings, have better photos, better pricing strategies, better listings, all that stuff. Those are the properties that are going to get booked, and the other ones are going to sit vacant more often than not.
Another area that's getting hit hard by Airbnb bust is not too far away from upstate New York. It's actually New Hampshire, Vermont, and Maine. Particularly Portland, Maine, everyone, where the Airbnb revenues are down 33%. This is an area.
So again, that was just a misinterpretation of the actual number. He said Airbnb revenues are down 30 some odd percent, and they're actually not. Revenue per available room is, and those are two very different things that he's collapsing into one. So that's just boldly inaccurate, and I just want to point that out for clarity.
This is an area that looks scary now, because there's 2,000 short-term rental listings in Cumberland County near Portland compared to only 350 homes for sale, folks. So there's 6 times as many short-term rentals here as there are homes for sale.
Which again, like the link there, it's kind of irrelevant.
Sale situation, which is likely going to lead to more inventory hitting the market in future months and years. And
it's really not necessarily going to do that. As you can see from this, like that didn't cause that to happen like throughout this graph. There are instances where it happened, sure, and then it dropped down below and like came back up. Like these very clear, there's no clear correlation between these two graphs here. And so to assert that there is just doesn't really make a whole lot of sense to me. And then the other thing is that, again, this is just properties that are going to become for sale. It doesn't mean they're going to be for sale for a good price. So again, like none of these macro trends are really where you want to be looking as an investor. You want to look at like, what's the long-term growth in average revenue per property I'm looking to buy? Is it like, the revenue's going up, the revenue's trending down? Where do I expect it to be? What are the other properties in the market performing at? What's a reasonable price for this property? What's it actually like? There's all kinds of things that are super important to look at as an investor. This is just not one of them.
what we're really seeing in the trends and in the data, everyone, is that there's a very clear reversion occurring from what happened during the pandemic, right? Like there was these big lockdowns in places like Boston and New York City that caused lots of wealthier people in those cities to flee up to the rural areas throughout the Northeast, and they bought homes and they pushed the prices up and they put them on Airbnb, but that's all ending now. More people are moving back to the city. When you look at the data,
it's actually not ending. I wouldn't say it's not like it's grinding to a halt. It's actually been really surprising. I thought that what he's indicating would is happening would be what would happen, but it's actually not. So if you look at the revenue data for a lot of different markets, like the ones he's talking about, what you'll notice is that they jumped up significantly during COVID for exactly the reason he's pointing to, like a lot of people fleeing up north and like getting out or down south or wherever. They're just fleeing outside of the major metro hubs because when they can't travel internationally, they travel domestically, right? And so there was a lot of staycation happening. That market really blew up. And what you would expect is that after the blow up, now that international travel opens back up, it would come right back down to like on pace for where you'd expect it to be. But this blow up is actually sustaining relatively well, and you're still seeing a drop, but not nearly the drop that you would expect there to be in a lot of the markets like the ones he's talking about. And so that's actually been pretty surprising for me. And it's funny because a lot of people are looking at it going, oh my gosh, there's been a 30% crash or a 20% crash, and they're panicking. And I'm sitting here going, well, I actually expected there to be a 50% crash. And so the fact that there's only a 30 or 20% crash, we're laughing. We're in a really good place. And so again, it's just like, if you look at the trend, you could see the writing on the wall that it was going to drop down, and you can really start to see this stuff if you're looking at the right data.
Look at the data on the best performing Airbnb markets over the last year. It's the big cities. It's New York City, it's Washington, D.C., it's Boston. And so this isn't just some blip or short-term trend. This is a reversion back to normal, which is going to be a big problem for all of the boomtown areas during the pandemic that added the most Airbnbs. One of those boomtown areas that's getting hit very hard right now is the Southeast, particularly the area flowing from South Carolina, North Carolina to Tennessee. We talked earlier about revenues in Nashville being down 40%, Seaverville being down 48%.
Again, he's saying revenues are down 40%, but they're not. Revenue per available room is, and that's a really, really big, important distinction. And it's just super misleading the way that he's presenting it.
Asheville being down 43%. But if you just keep going to the coast, you can see the losses and the bloodbath continues. In a place like Myrtle Beach, the Airbnb revenues are down 45%. And that's a major.
Oh, it's just so annoying that he's just grossly misrepresenting what the data is actually saying. He's just miscategorizing it. It's not a bloodbath. It's like some people, yeah, are getting hit, but other people are not getting hit because it's not a big drop in revenue, right? It's a drop in revenue per available room. So in a lot of these markets, total revenue is actually growing still, or holding really constant, or dropping only slightly. And the revenue per available room is only dropping because there's more available rooms, not because there's less revenue.
Major problem because there's currently 9,000 short-term rental listings in Horry County in Myrtle Beach compared to only 3,000 homes for sale. I mean, just look at how these lines have flipped, basically starting in late 2019, and eventually they're going to start flipping back. But folks, the downturn in these areas...
Just because you can overlay two graphs on one another does not mean that they're correlated to one another. Like, this is ridiculous. Show me the correlation, because every single time that you do this for a city, the graph looks drastically different. There's not actually a correlation here.
In these areas pales in comparison to what we're seeing in one of the biggest bubble housing markets in America that I called the bubble on 2 years ago when everyone said this market would keep...
Wouldn't you know that? He called the bubble. Crazy. It's almost if you cry wolf every day, you're eventually going to be right.
Market would keep going up, but no. Home prices in this market are down, rents are down, and now Airbnb revenues are down because Austin, Texas is just a bloodbath right now. With Airbnb revenues down 46%
RevPAR.
6% in Austin, as well as 44% in nearby San Antonio. Clearly not as many people are interested in visiting Central Texas as they were 2 years ago, and it's showing up in this.
No, that's not what that means. It doesn't mean that that not as many people are interested in visiting. It means that there's more accommodations available for them to visit, and the growth of revenue isn't keeping pace with the growth in supply. So again, it's just literally look at what the data actually means. Like, just look up the term. He even said what it means before, so he knows what it means, but he's just mischaracterizing it. Super frustrating.
It's data. But I know what some of you are thinking at this point, everyone. You're probably thinking, Nick, all right, this data is great and interesting, but how do you know that these crashes in Airbnb revenue are going to translate?
They don't even exist. What I'm wondering is, why are you saying they exist? Because there's no crashes in Airbnb revenue that you've shown. Like, they may be there. There are some markets where the revenue has crashed, but realistically, that's not actually what we're looking at, and that's only in a few markets. And there's all these other factors, right? It's like, No, I'm not wondering how do you know that that's gonna. I'm wondering why are you lying and saying that that is so, that there is a crash in Airbnb revenue, because there isn't. Like, come on, man. We like if there is, show that data. If there isn't these specific markets, show that data. Don't take some other data and mischaracterize it as a different type of data. Like it's just inaccurate.
To owners being forced to sell, like what if the owners just decide to hold their properties forever because they have a low mortgage rate? Because a lot of people are talking about that. They're saying because all these existing owners have 3% or 4% mortgage rates, that there's no incentive to sell, and that even if things go sideways on their rental, whether it be a short-term or long-term rental, maybe they'll just decide to hold for a couple years and fund it out of pocket. And folks, I'm sure some owners will do that. This is not predicting that every Airbnb owner is going to sell. It's merely saying that in markets where there's lots and lots of Airbnbs and lots of new supply and a big crash in revenue, it's just very likely that these owners are going to be forced to sell, because many...
If there were a crash in revenue, yes. But again, the point he's trying to make is actually a real point. Like he's just using horrible data to try to back it up, because he's just completely mischaracterizing the actual data he's looking at. So yes, I actually agree fundamentally that some people who bought Airbnb properties are going to need to sell them because they bought them on bad fundamentals. And that's always been true in everything. There's people that invest and make poor decisions, right? We've always known that. And there was an accelerated amount of that. If you look at it, there's a huge growth in these markets of people just buying properties, jumping on the bandwagon, and the markets oftentimes can't support that. And so it doesn't mean that, it's not necessarily to say that like if you bought a property in the last couple of years, you're more likely to have to sell. It's that if you bought a property in the last couple of years and you don't know what you're doing, you didn't like do your due diligence, and you don't know how to optimize the property, then you could be forced to sell. Because again, it's not a drop in revenue, it's a drop in revenue per available room night. And so if you're actually one of the top performing properties, whether you started recently or 10 years ago, if you're one of the top properties in that market, you're not seeing a big decline in your total bookings or your revenue for the year. It's the underperforming hosts that are seeing that. And yes, some of them will have to sell. Some of them will have low interest rates on their mortgage. Some of them will have high interest rates on their mortgage. Some of them will have bought a couple of years ago. Some of them will have bought a couple of months ago. Some of them will have bought 5-10 years ago. Like, it's really the bad operators, like the people that can't actually compete. Those are the ones that are going to be getting hit. The people that are going to be getting hit are the ones that just, don't have good fundamentals in order to beat the competition.
Many of them are losing money. And to prove this point, I actually looked at some numbers on what an Airbnb owner in a city like Austin or a city like Phoenix is facing right now. And I covered this in a post on the Reventure app blog. I'll have a link to it in the description if you want to check it out. But basically, I put together a Phoenix Airbnb pro forma for short-term rentals and figured that if someone operated their rental full-time, they'd earn about $3,000 a month in revenue. Now, you might be saying, that's great. $36,000 a year in revenue sounds good, except you got to deduct the expenses. Airbnb takes a fee, there's property taxes, there's insurance, there's maintenance, there's utilities. A lot of people use a property management company, which can charge anywhere from 10 to 20%. After all that, you're actually left with $16,000 net income for your Airbnb in Phoenix. And if you bought it with a mortgage with 20% down at only a 4% mortgage rate, you'd actually be losing money after.
So again, like, he's not disclosing what numbers he's looking at. Again, I would assume he's looking at average numbers, like 50th percentile numbers, for example. Whereas again, if you're in the top 25% of the market and you're actually performing well, you'd be able to support these costs. If you have a lower mortgage rate, you'd be able to support these costs. If you don't have a property management company because you have good systems for it, then you're not gonna pay those costs. Like, there's all kinds of ways. So yeah, again, like, I fundamentally do agree that some people are losing money, but putting a bunch of numbers on a sheet that are arbitrary doesn't help to prove that point. Frankly, I don't think it's a point that really needs a lot of proof behind it. It's not a really hard concept to grasp that some people make bad investments and they lose money on them. But the macro point to say that this is happening everywhere because of these numbers that I'm showing on this sheet that I just made up and put down, it's like, it does more detract from what he's trying to say, in my opinion, than to add.
Money after paying your mortgage interest at only a 4% rate. This is assuming a low interest rate, and they would still be losing money. And ultimately, people can only lose money for so long before they either decide to sell or they're forced to sell from their lender if they got one of those DSCR loans. One area in general where I just think the situation is going to get worse in coming months is the West Coast of America, particularly the Mountain West, where we can see big declines in Airbnbs across.
All right, I don't think there's really going to be anything too new and exciting in the rest of this video here. The video is already getting pretty long, so I'm going to wrap it up there. Let me know your thoughts. If you agree, disagree, what you think, let me know in the comment section down below. If you like this video, got value from it, if you learned something from it, then make sure that you hit the like button on this video here. And yeah, just let me know. If you're new to the channel here, make sure you subscribe. Stay up to date with the 2 new videos we post every single week. Hopefully you learned something, and hopefully you can use this video and this kind of way of critically thinking about what you see to really question what you see, because not all of it is exactly as it appears at face value. And there's a lot of people that just aren't really portraying things accurately, let's just say. So let's end it there. Thanks so much for watching. I'll see you in the next video.